Hey, Ken Turkington here with the First Commerce Financial Home Loan Team. Wanted to show you guys the steps that we take to make sure you're getting the best mortgage rate and mortgage closing cost combination in the marketplace. So I'm going to walk you through a couple of things. Let me share my screen. The part that we're incredibly excited about being a mortgage broker is we have a big list of lenders that we get to pick from. I'm going to start here just by entering in some criteria to match Mr. Sample's transaction. So this is a purchase transaction. Mr. Sample is buying a home for $350,000. He's putting 10% down. Mr. Sample has a credit score that we're going to assume right now of 690. He is a first-time home buyer. He is buying a single-family residence in the wonderful community of Lakewood Ranch, Florida. And we're going to submit this information to that big list of lenders that we get to pick from. This will take just a second. I'm going to scroll down just a little bit so that you can kind of get an idea of the amount of options that we have to make sure you're getting the best deal possible. So in this scenario, we're going to go right to the top of the list, which is the lender that has the lowest rates. There isn't anything about Mr. Sample that says he has a niche underwriting concern, so he fits our what I would call generic bucket. So we're going to pick Mega Capital Mortgage as an example. And when we pick them, now we get to see all of the interest rates that they have to offer. We're going to focus on 2.875 through 3.125 because this is going to work for Mr. Sample's scenario. We take that information and we now bring it over into our loan presentation so that we can evaluate that and provide some additional context. Now, the other thing that we're going to do when we do Mr. Sample's transaction is credit score is 690, which is solid. That is a notch or two below the best case scenario. So in those instances, we're certainly going to look at the credit and see if there are any quick action steps that can be taken to take his credit score from 690 to 720. So current scenario for Mr. Sample are these three options that we talked about here. Again, we have the interest rates from 2.75 to 2.875, to 3 1/8. So the lower the interest rate, you'll see down there the yellow bar below. In 2.875, there is a small amount of money that Mr. Sample is going to have to pay to buy down the interest rate based on today's pricing. If we look at 2.99, First Commerce is actually able to provide a credit back to the consumer to reduce the closing fees. And then that 3.125, that's even a larger credit. So we're going to get back to which option we pick. But what I also wanted to draw attention to is we also ran some scenarios assuming that Mr. Sample would take some steps to improve his credit before he actually buys a home. And what that equates to is approximately 0.125% difference in interest rate. So instead of 2.875, that rate will be 2.75. And then also, due to the credit change, the PMI is also reduced with the greater credit score. So we're going to continue this analysis so we know where we can get the best rates and fees. And let's just assume that Mr. Sample is buying a home right now. So any credit improvement or steps, we don't have time to do that for his particular scenario. But now we're going to come over here to the part of the equation which says, let's figure out which rate and fee combination saves Mr. Sample the most money. In this example, Mr. Sample said that he's going to be in the home for 3 to 4 years and expects a job transfer. So we're going to look at the cost of his financing over a 4-year period of time. So we can see if we go to this very bottom row, this is the total cost of the home loan, which is the interest paid over the 4 years and the mortgage fees all combined. So you can see here actually that the lowest cost for Mr. Sample over a 4-year period of time is actually the highest rate scenario with the least amount of closing fees. And we have the ability to fluctuate this and target a number of different time periods, but it really is interesting when we look at that of the time frame that we should analyze. Okay, so just a quick recap. Again, a large list of lenders that we get to shop every day to provide the lowest rate and fee. The guidance of, hey, let's take a peek at the credit. If there's some steps, let's do that in advance so that we can get you an even lower cost of funds. And then we help you analyze over a period of time which loan is going to make the most sense. Hope that helps. You guys have a great day.